Hello and welcome to Hot Commodities. I'm Manisha Gupta.
And I'm Tanvir Gill. And over the next 30 minutes, it's a week that belongs to the metals pack, Manu. So we have to talk about what's happening in the world of commodities and how that's impacting metal stocks. So a quick summary of the equity as well as the commodity markets over the next 30 minutes.
The commodities post strong weekly gains as increasing numbers of investors find them oversold. From crude oil prices to base metals, they all post firm gains amid questions about the rally's sustainability.
And not just that, markets end the week on a high, backed by a stellar bounce back in commodity prices. Metal majors like Vedanta, Tata Steel, Hindalco were up 18 to 24% this week.
Well, it has been an amazing comeback for the commodity space, especially for the base metals, which have gained 8 to 10% that we've seen coming in for this week. The major reason, of course, has been what happened in the Fed meeting minutes, and the interest rate hike perhaps may not happen by December, even 2016 March, and that really took the US dollar on the lower side, the worst weekly decline that we have seen coming in for 4 months, and that was supportive for the dollar-denominated commodities. Having said that, it is really the zinc prices which saw the run-up coming in on the back of Glencore cutting output. Remember, Glencore is the biggest miner in the world, and if Glencore does come out and cut output, that really tells you that the other miners for other metals also might follow suit, and that really has put pressure on the price, or rather taken the prices on the higher side.
Oh, yes, indeed. And not just that, what started off with this big rally in the commodity space and base metals and the commodities universe spilled over into the equity markets as well. So, just to put the things in perspective, from an equity market angle, you have the CNX Metals Index, which gained 11% this week, followed by Hindalco, which gained 19% this week, Tata Steel, and these are just some of the benchmark stocks which the market follows, essentially leading the rally in the commodities basket. And Vedanta, top it all, 24% was the kind of gain the stock witnessed in the session today. Just to put things in perspective, this year so far has been a downer, so to speak, for the commodity space. The metals index losing 31%. So, in context of that fall, this rally seems like a bit of a blip, an adjustment, a rebound that was pretty much in the works. Hindalco, pretty much the same story. The year-to-date chart would reflect that. Tata Steel, Vedanta, significant falls coming in, Manisha, there. So in that light, would you believe that this is just, perhaps a technical rebound that was waiting to happen because these stocks, these commodities were oversold?
Well, absolutely, Tanvi. That is the point to start with. The commodities were oversold, and that's the reason we've seen that initial run-up coming into the markets. And even as we talk, I would want to really bring the prices on screens, because we can see those flashes on your screens there. The zinc prices are now 11% in the intraday market. I mean, this is the biggest one-day gain that you have seen coming in for zinc prices in last 5 years. And it has been an amazing performance that you have seen coming in for the other base metal prices. Nickel shows a 6% of a gain. Copper, lead, aluminum, everything that you want to pick up in the base metal space has seen an amazing run-up coming in there.
In fact, let's just revisit those prices again for the benefit of our viewers. Copper,
sure.
Zinc, aluminium, as Manisha is pointing out, as those charts are coming in on the screen, these are big rallies. And again, in the context of the sell-off that these commodities have seen this year, Manu?
Well, yes, as you were pointing out, Tanvir, if you look at the commodity stocks, they are still down for 2015. And that's pretty much the case when you look at all of these commodities also. They're down between 10 to 25%. But for the day and for the week, we have done amazingly well for that space there. Let's get on then our guest Tanvir, and we have with us Thomas McMahon, who is MD and CEO at UD Trading Group. We're also joined by Piyush Jain, who's Equity Research Analyst at Morningstar. We also would have Jasper Lawler, who's Market Analyst at CMC Markets. And joining us also on the discussion is Manish Singh, Strategist and Head of Investments at Crossbridge Capital. Thomas, let's start with you first. And what an amazing day it really has been. The rally has come in on back because it was oversold. But does it look sustainable to you? Because today the rally really was peaked on because of the Glencore cutting output.
Well, I guess I think a lot of this is also currency driven. I mean, there's been some big corrections relative to the dollar and the Asian currency. So I think you've got a double support here. If the currencies continue to go in that direction, I think it's very sustainable. It seems the China numbers have turned around too relative to iron ore. So, and everybody, it's sort of a feel-good effect, I think. We've been down for such a long time. The markets were due for a good correction.
Thomas, and it wasn't just the base metal space because energy also has seen a huge run up. This is the best week in 5 months, and we have seen 10% gains coming in for both the crude varieties. What's your sense? Is there more steam left? Would you buy at these current levels?
Maybe $5 to $6. I think even the best people have got a call over the longer term, somewhere between 55 and 60. Probably 55, 56 would be, I would say, a top-out mark, unless you get some extraordinary, civil event where you've got a disruption. And I don't really foresee that at the moment. And again, you can't tell. But I think even the Saudis are becoming pragmatic on what they're going to do with their production numbers. And there's some mitigation in the North American drill counts. So I think you probably got a good shot for another $5 to $6 on the upside.
All right, as we are going through this discussion, getting a sense of whether this is a conclusive trend building, a sure reversal of the weakness that we've seen in commodities all of this year, the question we are asking is this a time to buy commodity and metal stocks? So, the underlying commodities, is it a time for a turnaround there? And should one bet on metal stocks in lieu of that? Cyclicals are turning the corner. So is it a good time to take long positions? And of course, the other big question that we are raising is whether this is the end of the commodity route that has, for commodity traders, been a very, very painful time.
It has been debatable, of course, and not everybody is putting money out that this is a bottom that we have seen. But for the short term, as we heard Thomas also say, that this is a good time to buy. Another 5 to 10% of a run-up in this rally is what he's working on.
In fact, Piyush Jain also joins in, as Manisha highlighted, to put the equity story on commodities in perspective. Piyush, what's your own sense? Does this look like a starting point of things turning around?
Yeah, hi, thanks for having me. No, not really. So I think in a downturn, historically, if we see, we are in a phase where there will be a lot of supply adjustments. We will continue to hear news of either companies going into restructuring or M&A, mines being shut, and that will continue to perk up the prices, and the swings will be both up and down. For now, where we are right now, we are indeed hearing news of cut downs in zinc, and what is happening now is, for where we are right now, we actually could see prices which are perking up could translate into stock price movements, another 5 to 10%, as you were saying. That is complete a possibility. But this doesn't imply that we are again into a long-term bull run. I think next 4 to 8 quarters would remain challenging for the commodity prices because the supply is far more than the demand. And I think till we complete a supply adjustment, we are not going to see a permanent price upward movement, which means that the stock prices would remain volatile. And as they were beaten a lot during the last few weeks and few months, I think they are basically due for a good upward price movement, and that's what we had seen in Vedanta and Hindalco. And I think Vedanta would be seeing a much stronger movement, primarily because of higher exposure to zinc and crude. So some upward price movement, but that's not sustainable in my view.
Okay, Manisha, looking at the markets from London, what is your own sense? How are you looking at this reversal in commodities? Is it conclusive, given the fact that, technically also there was much expected in, that a rebound will come in because these names, these commodities were oversold and the underlying stocks were also oversold? How would you characterize this rally?
I would say that short term, yes. And the reason I would give is that, of course, commodities were oversold. That's not the news. And so you're seeing a buying back of those. I also think that the data in China is going to turn for better in Q4, end of Q4 and early Q1. So it gives you an opportunity for a rally. So therefore, I am not a secular buyer of commodity, especially energy. I don't think oil prices are going to go much higher than 45 or 50 because there's enough supply. But the base metals had been sold a lot on the back of bad data from China. And the reason I think the China data is going to improve is because a lot of a slowdown was driven by a decrease in land sale. To give you some number, in Q1 was 1/3 decrease in land sale, in Q2 20% decrease. In Q3 we have seen a 30% increase in land sale. And sometimes this has a lag of at least 2 quarters. So I'm expecting that good China data should come in Q1. And that is my basis of buying oversold commodity names, but not because I expect them to keep rallying forever.
Fair point. Then let's drill it down, while we're addressing the underlying equity story to commodities, to the names that have moved: Vedanta, Hindalco, Tata Steel, some of the marquee stocks, index stocks within the metals pack, which have led the market higher this week. Do you see more upside there, Manish?
It's always a tricky one with names like Vedanta and others, because it's not just about the metals. There's a lot of story that goes with those companies. So it's a tricky one. I would say short term, yes, to buy in the rally, in the momentum, but be careful about the levels or how far the rally goes. Given that we had a very dovish Fed minutes last night as well that we have seen, so that is going to help the market as well. So yes, for this quarter maybe I'm hopeful that earnings season in US, which is starting now, started last night, is going to be slightly better in terms of expectations. So I would say yes, but be careful holding them into early next year. I think maybe for this quarter it's fine, but for next quarter I would be very careful.
Fair enough, Manish. In fact, we'll carry on this discussion. But, so far into the show, we've identified the fact that it's really a 3C story. So currencies rebound, you have that spillover impact on commodities. And then, of course, the third angle being China. And Manisha, do you think that the data over there could be picking up, which is why the largest consumer of commodities comes back into the market? Then that would bring about the much desired demand that everybody's waiting for.
Well, Tanvir, that really is the hope, isn't it? Because we've seen worst of China data, and markets do feel that we perhaps are looking at some sustainability, some consolidation coming in there. But the surprise really has yet in come in from the US data that has been on the weaker side yet again. And markets do anticipate that second quarter of China is when you would see better data coming in yet again. While we have established the fact that the rally is perhaps short-lived, the bankers and brokers, even as the metal prices have been running up this week, have come out with their outlook. Take a look at the Goldman Sachs report, and they have cut the 2016 metal outlook by 20 to 29% on the higher side. Ditto is the case with UBS. They have cut targets for metal and gold by 10 to 15% as well. So that really tells you, Tanvir, that even as we've seen a very strong, stupendous rally coming in today and this week, long term, well, that's really a question mark. But Thomas, coming to you now, what would you want to pick up from all that has run up in this week? I mean, what is your one pick that you would want to pick here?
I think it's the industrials. I mean, I really believe, the pressure was almost a false pressure. The world hasn't collapsed. The economics, this isn't Lehman-style events or anything. There's sustainable industrial turnaround. And I think the Asian economies, all of the question marks have been sort of taken off the table. Everybody sort of knows where China is and knows where India is, and the Southeast Asian economies are where they're going to be. I don't see any more downside. So, and you're seeing the North American markets turn around, and housing starts and employment numbers, and that's always good for industrials. Probably the biggest question mark is can they turn around the oil inventories going forward, and even that seems to be putting a good light in that they're going to stop. They're going to be shutting in some production numbers. So I think overall we're putting in a good bottoming effect. And I think also, too, it's probably got to have the industry shorts or the professional shorts worried a little bit. And I think that's part of the effect you're seeing today, people closing out short positions that have been on the books for quite a long time.
So, Thomas, when you say that you want to go out and pick up the industrial commodities like energy and like the base metals, how much of an upside would you want to play onto that one from here? Because we've already seen 10 to 15% of a run-up from the kind of lows that they traded on.
Wow, I mean, yeah, we've had 4% on the minimum, and I mean, we even have gold going in the same direction, which is a very rare timing. But it's late in the season too. You're into fourth quarter. You're going to have northern hemisphere weather changes and things. So I'd be a little skeptical if it's sustainable into November, December. But I think it's a sigh of relief because pretty typically October is not a particularly good month. And we seem to have turned a good corner, especially with interest rates, with the concept of not raising rates, at least for the foreseeable future. I think we probably could carry this for over the next few weeks.
Thomas, so when you say that you are expecting another 4 to 5% of a run-up from here on in this rally itself, wouldn't you want to see some consolidation? Because while the volumes have been good with the kind of run-up that we have seen, but consolidation is always better, isn't it, when we are looking at a further gain?
Well, I think there's been a big overhang in all of the commodity firms. I mean, probably going back a few years, starting with Olam, and then Noble's been challenged, and Glencore got severely challenged. And I think Glencore has really set a great tone for, look, gentlemen, yeah, you took a run at our shares and our bonds, but our business is fundamentally sound. And, oh, by the way, we can afford to shut in some production. And they picked zinc, which is quite interesting. So maybe the weak link in the industrial chain, but you can see the impact. The swing number of 1% above or below demand or oversupply is really the key. And the same thing for energy. If you just get a 1% swing from overproduction and overstorage to a demand number, it'll turn. And I think that's what we're seeing now. We're seeing that shift to that 1% at the moment.
That point is well noted, Thomas. Let's also get in one more voice, and joining us now is Jasper Lawler, who's market analyst at CMC Markets, and he joins us on a London phone line as well. Well, Jasper, wish you were in Delhi and India, but London right now. What's your sense on what we have done in commodity space today and in this week? Do you see it sustaining, or would you say that it perhaps was Fed, it was the US dollar movement, China data, all of that working in a very short-lived?
Well, I certainly think it was all those factors involved. I think the fact that we're seeing a rally in commodities at the same time that we're seeing a depreciation in the US dollar is not a coincidence. It's certainly playing into it. And obviously a lot of these, the mining companies, the mining stocks and the commodities themselves were beaten down into 6-year lows. And, there's, for the moment, for me, this is a bear market rally. And there's not any particular evidence to suggest otherwise. And one of the worrying things for me is that this rally in stock markets does seem to be a bit heavily reliant on commodities, which, again, I think is a bear market rally. So not the best precedent for, not the best setup for an equity rally is, a rally within a bearish market.
Fair point that. So Tanvir, it really comes around with no conviction that it is a bear market rally, perhaps a dead cat bounce, and not at all long-lived is what our experts are telling us.
Oh yes, indeed, because you've seen like an 8-month fall in commodities, and
6-year lows, yeah.
Exactly. So extending out the timelines, there's been a fair amount of sell-off that the universe has witnessed. Compare that to just 1 week of gains, or perhaps 10 days of gains. And I think many would raise a question mark on the sustainability of this rally. And Piyush, come to you on that, because we also have an earnings season starting off next week. Do you see the commodity companies reporting anything different than what they have in the past? So one would just read this as a technical bounce back. Even if the China data improves, the trickle-down effect would take at least 2 quarters to show up.
Absolutely. I think this quarter earnings should be weak. And I think more than the data improving, it's more about the pace of supply adjustment. If we start hearing more and more mines being shut, or more companies going down under, it will actually perk up the prices faster. If not, then the pace of adjustment will extend over a couple of quarters. So I think the pain is right here to stay for some time, and it's going to be spread out across companies. Hindalco over the last few quarters has moved higher on the cost curve, which means its performance would be slightly worse than you would have expected a year or 2 years back. And then that is all because there's raw material linkages. While Vedanta, again, is going to report bad earnings, but I think going down 1 or 2 quarters down the line, I think earnings should improve slightly because the crude and zinc dynamics have improved. But I think next 3-4 quarters, I think these companies should actually continue to report subdued results, and the financials are going to remain challenging, primarily because both these companies, they have good amount of debt, and I think the leverage is going to play a part, and investors, I think, should be prepared for subdued profitability. But over the last few weeks, because these stocks were beaten down a lot, I think we are due for some rally, but I think then again sense will prevail, and I think it's more for the swing trading. Investors, I think, should recall that primarily operating environment continues to remain challenging, and these companies are not going to give excess returns on invested capital for the year.
So while it's a spring effect that we are seeing in all of these commodities, but because me and Tanvir are trying to put into focus that the commodity and the related stocks have done well in this week, Jasper, this one is to you. So if we are looking at a 5% gain in commodities, would you look at a 5% gain in the related commodity stock as well? Is that how it works?
Well, not necessarily. There are some other sort of mitigating factors within the companies themselves. Obviously, looking at Glencore, that's had a life of its own, and there is some worry that a lot of these mining companies, especially, are a bit over-leveraged and still probably not taking the kind of Glencore approach that we've seen from today of cutting back production, but actually ramping up production at a time when global demand for commodities is slowing. So I think that sort of debt dynamic within some of these companies is going to distinguish their performance and how well they perform in this rally that we're seeing at the moment. We're seeing some notable sort of gainers, BHP Billiton showing that it's got a bit of a better standing. Some of the others sort of lagging back a bit. Rio maybe not as strong as it could be. And I think how strong they perform in this rally will probably dictate to us when it starts to roll over who's going to fall the fastest.
Okay, we are completely running out of time. So, Manish, we let you have the final word. Do you think that this rally is sustainable? You're, of course, questioning it, so I know part of the answer there. But, what's the view ahead, given that you're an investor in the equity markets?
Yeah, I think you will still have some rally because it is also being underpinned by a strong rebound that you are seeing in globally. So, you have to remember that when the news turns negative, then there's a lot of short selling happening as well. A lot of these short sellers are going away. So that would see an additional impetus to the rally.
All right, gentlemen. Thanks very much, all of you, Thomas, Jasper, Piyush, as well as Manish, for joining in and giving us a 360-degree perspective on what's really happening with the commodities universe and the underlying stocks. Short-lived is the rally.
Well, absolutely. But I'm taking away that $5 up in crude, 5% up in metal, still not ruled out.
Okay, that's so some more leg to go before the rally fizzles out. From Manisha and myself, thanks very much for watching this special edition of Hot Commodities.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.